Hello everyone, welcome to my YouTube channel once again. My name is André Cardoso. Thank you very much for being here and thank you for following. For those who are here for the first time, I welcome you into this long journey. I hope at the end you take some useful information from these videos that I will show you. My objective is to share a concept that I use and that I apply in order to search for opportunities to trade the markets. But my objective is to share some of those concepts and some technical analysis that I use to search for those patterns. Obviously, this is not a suggestion to get involved and to participate. It's only actually an educational video that I want to share with you in order to help those who are starting to learn process inside the market. So that being said, at this point I will update some of the charts that I shared yesterday, but not before going deeper with the DXY, the dollar index, and the reasons why I believe we are now facing one potential pressure price zone. And everything can change. Obviously, only the market and only time will prove if this idea or if my insights are correct or not. As some of you already know, I'm not a fundamental trader, so I don't connect the external news and external events with the market. I tend to rely 100% on a technical analysis, on a technical perspective, and usually the charts will show me those signs, and the charts will provide me with a specific pattern which allows me to get involved. So I don't need to know where the market goes, I just need to know which pattern the market is forming, where it should trade, or what target that pattern usually search for, and how can I apply a decent risk strategy to trade that specific pattern on a repetitive mode. So I need to repeat that process over and over again. So that's one of the reasons why I search for advanced patterns, those harmonic patterns, because I can repeat a process that I know that will work, and I can apply a risk strategy, which allows me to be here in the next day to trade again, even if the market decides to punish me at some point, because there will be sequences of times where the market will punish you independent of the technical strategy that you are using. The market will fail you for sure, and that being said, we need to be prepared for that. But I need to assure to myself that I will be here tomorrow. So I need to apply a decent risk strategy to trade those advanced patterns or any other strategy that I want to use to engage the market. And that being said, that allows me to survive. So those are some of the elements that I want to share with you today, based on the risk strategy that I use and based on those patterns. And actually one simple view how I see the price structure and what we can expect, or what I'm expecting based on those same views. So first of all, this is a weekly time frame. Let's start with the DXY. I want to share with you my views for the DXY and the reason why I see this as a potential pressure price zone. So first of all, let me call your attention to this previous structure highs, this previous structure resistance, which is also our most recent support. So we have actually kind of a pivot zone for the DXY. So let's say if the market decides to break below these lows, it will open the door for more bearish momentum. So we have also this ascending trend line support. I believe most of you are already familiar with that, with this specific trend line support. So, and basically we are threatening the violation of this trend line support. So we have kind of an horizontal support, previous structure resistance. We have we are now threatening the violation of this ascending trend line support, and this is pure speculation. We don't know if that trend line will act as a potential pressure element just because the market has respected. This is just pure indication of a trend or a momentum. And that being said, since 2011, the market has traded higher. So the market is trading in a bullish momentum since then, but inside this huge sideways moving process. So basically we have a sideways moving process since, basically since February 2015. So the market prints these highs and then enters into this sideways moving process. So we are in a consolidation process after this very first swing. So we have a first swing and then we have this consolidation process, the same way we had before this first swing, and then a huge process of consolidation that we can use this as a trend line and kind of a triangle there. Okay, so basically we are trading inside this sideways moving process. I believe the price didn't create a strong signal of a breakout of this structure. The market is trading below this trend line support, but that doesn't assure us the market will fall from here. We need to search for a confirmation of that, and I believe only trading below this previous horizontal support will confirm that. So basically below 88.24, I believe that's the price label. Let's nail that one. 88.25, so I believe below 88.25 the price will fall. So until there we need to wait. So we know that there is a trend line support approaching from the bottom, and let me increase my time frame here just to show you the potential for the Dixie for more downside momentum, and also the potential or the eventual reversal from these levels and eventually more upside momentum. So let me share with you both of my perspectives, and I will need to wait in order for major confirmations for long-term perspectives for the Dixie. I believe we will need to wait a lot of time unless the market reacts as in a rally mode, or if the market sinks as if the world will end the next day. But I believe we will need to wait a lot for the Dixie to confirm that, because we don't know how long the market will remain inside this sideways. The market can actually can start to trade inside a minor range, and we don't know how long the market will remain inside this process. For now, and based on what we have at this point, I can see these with two different perspectives, and both of them are obviously inverted, one for the bears and one for the bulls. I shared this before. I tweeted this chart before as a potential double top. So we have kind of a double top, and we can use a Fibonacci retracement here. We have a double top at the golden Fibonacci retracement level. So I shared this before with some of you, at least those who are following on Twitter, and I used this, and I shared this as a potential inverted head and shoulders. And usually this is not the type of pattern that we will search in these environments. So we will not search for an inverted head and shoulders after a very strong impulsive momentum, but sometimes it can happen, and if the price is starting to show you that possibility, we should not ignore, because there are only two things that we can do with an head and shoulders, or double tops or double bottoms or cup and handles. Those type of situations is to trade them or to fade them. And this is the clear situation where we can use both of the situations. We will trade them above the neck zone, or we will fade them below the head. So basically we wait for a breakout of those two levels in order to confirm the validation or the invalidation of the pattern, which will trigger the other one. So basically we have the potential double top, which will trigger below the neck zone. So below this neck zone, the market will trigger the double top, and the head and shoulders will trigger above these previous structure highs, the neck for the head and shoulder, the inverted head and shoulder. So that being said, we need to wait for or a violation of the previous structure highs to confirm, to search for confirmation for the head and shoulders, or the double top below 88.25. So let me share with you the default projections for those trades. Above the inverted head and shoulders, the default projection for that pattern, if triggered, we search for the 200% Fibonacci extension, which may put the price trading at 115.24. The same way, the same Fibonacci I will use here, and I will search for the 200% Fibonacci below. A 200% Fib, that will put the price trading at 75.85. So which means a violation of the previous lows will put the price trading at 75, and the violation of the previous highs will put the price trading at 115. So, and those are default projections. We never know if the market will go there. We don't know on which conditions the market will go there, how many sequences of waves do we have until there, if the market goes directly with a symmetrical kind of a projection directly into those levels, if the market will take some time to achieve those levels. We don't know. What we know is where the pattern will trigger, what the pattern should target, and where the pattern will invalidate. And in this case, the invalidation of one of them will trigger the other one. So I believe we should stay tuned to that possibility. At this point, we have two important levels as resistance: the golden Fibonacci retracement level, and as previous structure support, the previous resistance level. So we have this pivot zone. We have a strong resistance being used as a support and as a potential add for that in this kind of price structure. So that's one of the reasons why the price has formed this bullish momentum, because it has found the previous structure resistance, turned it into a support, new a retest of the previous highs, potential technical double top, only validated below the next zone and the most recent support level. So we can see this is a monthly chart. We can go into a weekly chart if you want. Basically, it will take some time it may take some time for the price to confirm one of those situations. What I want to call your attention, and because this is not the usual head and shoulders, as I was saying before, this is not the place where we search for head and shoulder formation. It can happen, and it will trigger above the previous structure highs, but it's not the perfect place to search for those events. Usually we search for those events at the bottom or at the top of a structure. But it can trigger, and you need to stay tuned into that possibility. Another thing that I want to call your attention is the reason to form the right shoulder there, for a few reasons. One of them, price structure, previous structure highs now turned into a support, This is the highs of a technical double top, technical double bottom formed here on a lower time frame. I will show you that, and actually I will plot a specific pattern for you here, which we can apply later in the markets, which is the 2618 trade setup. So basically we are now facing these previous structure highs, and also, let's say, the bottom or the lows of the left shoulder. So let's say we are already trading a few points below the lows of the left shoulder. So one of the reasons to search for that possibility at this point, I will not be surprised to see a bounce for the DXY from this price zone. So basically let's stay tuned into this price zone. So we are now threatening the recovery of this next zone. Why this is a next zone? Let's push this back and let's go into this. Let's go here and let's go into a daily time frame. The reason why I was calling your attention to that heads and shoulders is because sometimes they appear where we don't expect them. And if you use only a technical perspective, sometimes they will work even when they are not so frequent. So basically we have a clear one over here after a period, after a three waves as a correction. The market has then later formed that heads and shoulders here, achieving the default targets, as we can imagine, the 200% Fibonacci extension. We can use this kind of projection, 200% Fib, but also, and I projected this pattern before, actually I projected a short from this right shoulder with a lower time frame event there, but ultimately I also projected the bounce for the DXY from this bottom with the crab pattern printed at 168 extension. So at this point I shared this as a crab pattern expecting a bounce. And what the market has done here, it has printed a double bottom, and that pattern was confirmed with highs above the next zone. So we have the next zone and we have closes. If you go into a lower time frame, actually I detected this double bottom on a lower time frame, and then we have the price trading above the next zone, closing above it, finding resistance, and then started to fall. And when the price starts to fall after a double bottom, I start to search for the golden Fibonacci retracement. And what I will say is, okay, if the market finds support at the golden Fib, I will buy the market and I will search for a default kind of a symmetrical projection. I will search for the 126, I will search for, the symmetrical ABCD pattern by default, and eventually taking this into consideration, if the market decides to find support here, I can also use, actually we have new lows there, so we can search for two different price zones. Basically I can search for extensions, actually the 168 extension and the 224, one of them nailing the symmetrical projection. So this is kind of an internal shark pattern here. Okay, which may offer some pressure, default projection for the symmetrical ABCD pattern. But then if the market decides, and we need to wait for the pattern to be formed. So at this point the market did not form that one, and we have also a major retracement from these previous structure highs. We can use already a Fibonacci retracement tool and put our fibs there. So what I will say is, if the market finds support at the golden Fib, I will buy that market, expecting then later the market to form the expected ABCD pattern above the previous structure highs. The previous structure resistance should be violated, and as soon as that happens, we search for that convergence there, or that extension actually. golden Fibonacci retracement reached. We should already adjust our projections from this bottom, from these lows. So a symmetrical projection will put the price trading below that golden fib, and we can use also the default extension from the first swing. Again, an extension from the first swing, and search for some convergence between those default Fibonacci levels and those shark patterns Fibonacci extensions and completion points. So basically we have the shark patterns between the 161 and then extended at 224% fib, and as soon as the market violates above these previous structure highs, which is what will happen now, we can start to project also a major bat pattern above. Okay, so that's kind of there's no perfect convergence, but we can see the price eventually trading even higher. So default expectations for the pattern in particular already being reached, 127% Fibonacci right there, symmetrical projection. So if you need a target for the 2618, obviously you need to start to partitioning your trade as soon as the market approaches your default targets. But then we can try to manage our trade if the market decides to trade even higher or even beyond your default targets. So at this point, I started to project the bat pattern and the potential alt bat pattern above, expecting some more bullish momentum above these previous structure highs. 113% Fibonacci retracement being reached, the market finding some pressure there, but not enough to trade the default 38% Fibonacci until now, as we can see. And then finally the price started to rally again, well, and going directly to those highs that we have there. So from here you can see the outcome for the 2618 trading beyond your default symmetrical projections. And well, that being said, that's what I want to show you. So I want to put an horizontal line here. So this was our resistance before this major reversal for the Dixie. So what that means, it means this was the price zone where the market decides to, okay, let's rally. And the reason why I'm calling your attention to this price zone is exactly just because we are now facing that support. This is the previous structure resistance for the double bottom as a potential, as a reversal pattern. And that being said, I believe that will be important. That may form the right shoulder for the inverted edge and shoulders, but not only. And as I shared with some of you already before, this is also the 78.6. Actually, we are already trading a few points below, but this is also the 78.6 and the bullish cipher pattern completion point. And I will tell you how we plot this pattern. So, of course, starting point of the pattern at the bottom. So this is the head or the neck zone for the patterns that I showed you before. And look at these. Look at the ratios, and the Fibonacci ratios will help you to identify those patterns. So basically, we have new highs here above all these previous structure highs, of course, new highs, and then the market has synced violating all these previous structure support levels. So this is a major swing, a major deeper retracement, followed by an extension of this entire swing. So if I use a Fibonacci extension, and if I search for criteria above, I will search for initially the 127 extension, and the market has almost nailed the 127 extension. So that fills one of another criteria, 127% Fibonacci extension. What I need to happen now, and of course this is a daily or a weekly time frame, it will take time for that to happen, but as soon as you see the price breaking below this previous structure support level, used as resistance already, you start to project that as a potential cipher which will complete at 78.6% Fibonacci retracement level. So that will complete the sequence. That doesn't mean the price will react. Usually will react from this price zone. The market should bounce from this price zone, and we should expect something like a 38% Fibonacci retracement at some point. As soon as the price starts to trade higher, we will target the 38% Fibonacci adjusted to the lows of this structure. So if the market decides to print a few points below, we need to adjust this Fibonacci retracement tool. But as soon as the price starts to recover, we will target the 38% fib. So by default, we will target the 38% fib from the 78.6. Of course, the market is already trading a few points below, so we need to adjust that Fibonacci retracement as in order to identify our real targets for a potential bounce from this zone. So this completes a bullish cipher, which is also converging with the potential, as I said before, the potential right shoulder, and of course, if the market decides to invalidate that pattern, breaking below these lows, it will trigger the technical level top formed above at the major golden Fibonacci retracement level that I showed you before. So this is my view for the DXY, and basically at this point I am kind of a bullish. I will not be surprised, as I said yesterday, I will not be surprised with the bounce from these lows or from this price zone. I will not be surprised with that for the DXY. And that being said, let's go again into my default charts here. So we have this bullish crab pattern printed at 91.35. The market has found some, actually the market did not found some pressure as support, but it has found pressure as resistance. I was calling your attention yesterday to these previous structural lows, the most recent ones, and which may be used as a resistance, and that was the case, that the DXY has found resistance at the previous structural lows, and it has formed a new low. So I admit there's potential for, obviously there's always potential for more bearish momentum. That's a major trend. The major trend for the DXY remains untouched for now. And that being said, I will not be surprised that also with more bearish momentum, which will guide me into a retest of that next zone as I showed you before. So that being said, let's stay tuned on what will happen. A nice and clear bounce from this price zone may guide us into an upside momentum for the DXY, which should be reversed with euro versus dollar as an example. So yesterday, we were trading this price, we were trading this Fibonacci extension level, the 260.8 extension level as support. I was telling you the possibility to use this extension level as support right above this channel trend line resistance. That being said, the market has found some decent support there. So I will not be surprised to see more upside momentum for euro versus dollar. The same will happen for Aussie, the Australian dollar versus dollar, now threatening the monthly fractal not responding, let's say, accordingly to the default expectations for this bearish shark pattern. I was expecting a deeper retracement. It seems that it will not happen. I believe the market will trade above this monthly fractal for the Aussie. New Zealand, I shared this as an example of a maximum risk-reward approach that we can use. We can, but we should not use a situation like this, because any type of adjustment that we need to do, it will put you in a situation where you will lose more than what you expect to win, and this is just one of the situations. So if the market decides to trade the 38% fee, look what will happen to your reward using a one-to-one risk-reward situation. So we need to be careful when engaging the market. We need to be clear in terms of risk approach and the position size of our trades, the time frame that you are trading, the expectations that we have, the default expectations we have, the invalidation point of the pattern. But most important, the position size accordingly to the risk that you want to take trading that specific pattern on that specific time frame for that specific instrument or market. New Zealand also threatening with more upside momentum. I shared these on a weekly time frame as a potential head and shoulders or inverted head and shoulders. We have also targets for the Kiwi at 77.12, so let's see if the market will trade that golden Fibonacci and previous structure highs from 2017. Let's see if the market will approach those levels. There's room for that to happen. The Australian dollar versus the New Zealand, I shared yesterday the possibility to form this descending wedge and the violation of that structure, which should force a period of bullish momentum. So I will not be surprised to see the market actually starting to retrace or starting to bounce from this price zone, and eventually even the 38% Fibonacci retracement being reached. But I'm still waiting for a major pattern which will only complete at 78.6% Fibonacci retracement level, the bearish cipher pattern projected below. But this descending wedge and now the violation of this structure, it may force more upside momentum. I'm not saying that will happen. We still need to wait for the recovery of the monthly fractal support at 105.66. So basically, unless the market, so we need to see the market trading above that fractal, and it seems it's not the case, at least for now. Let's see what will happen. Australian dollar, so I'm still waiting for that major bullish pattern below. Yesterday I was saying, if the market fails to find support, as always, if the market fails to find support between the 88.6 and the 113% Fibonacci extension levels, we should pay attention to an extension to the golden Fibonacci extension level, the 168 extension projected at 88.53. So at this point, and because the market is already invalidating those BAT patterns, I will not be surprised to see CHF sinking into these lows below the 168 extension. Let me just remove all those other levels. I can't use Y. Well, I'll plot it again. So I will wait for an extension of this previous structure, swing high projected below. So that's the 168 extension right there. This is CHF, which is obviously, as I said yesterday, this is related, inverted with euro versus dollar. As you can see, CHF trading lower and euro versus dollar already trading higher. The Canadian dollar, also share with you the possibility to form this bearish this bullish alt-bat pattern at 113% fib. As always, if the market fails to find support inside this range, we may see the price trading even lower. So yesterday we were threatening the recovery of these 88.6% Fibonacci retracement, forming kind of a double bottom here and then new lows. We're still trading inside this descending structure here, so nothing has changed. The possibility to form the pattern still valid, so we're still plotting that possibility, a bounce inside this range. I will not be surprised. But again, if the market fails support at this price zone, I believe we'll see, actually that will happen in general for the dollar related pairs. So if the market fails this price zone as a support, the market will keep trading even lower. So that's natural. The market will trade above, will trade below or will trade above a specific price zone. So after a consolidation or after a correction, the market will always trade in a specific direction. Norwegian krone also trading that range that I shared yesterday inside this potential. Let's see how the market will develop, but inside this kind of megaphone formation here. Let's see how the market will react. A lot of noise here. Let's see how the market will react. Also trading inside these bullish patterns territory, so I will not be surprised at some point the market being pushed and eventually trading the default targets or the invalidation of those, with the market trading even lower. But we still trading inside a zone where I admit longs in order to search for the 38% fib as a default expectation for a bounce for the Norwegian krone. The same I can expect for the Mexican peso. I admit if the Norwegian krone starts to bounce, that should be followed by the Mexican peso and not only. So I will not be surprised to see a bounce towards these descending trend line resistance I shared you yesterday. I admit a retest of this trend line resistance without forming this bullish bat pattern projected below, but ultimately I will see the price. I want to see the price finding support at this 88% Fibonacci retracement level. Ultimately, dollar versus the yen, I shared this on a lower time frame, eventually on a 2 hours, 1 hour time frame chart. But look, this is a 2 hours time frame chart for dollar versus the yen. I shared the potential bullish momentum above the daily fractal. As we can see, the market has rejected the violation of that previous structural resistance level. So we're still trading inside this range between the 4 hours fractal and the 4 hours fractal and the daily fractal. We're still trading inside this range, so let's wait and see what the market will print us. In fact, we need to wait. Projected above, the pattern still remains as a possibility, 105.44, 94 and 106.93. So bearish alt-bat pattern, and extended above as always the 168 extension, the bearish crab pattern above. Let's see what will happen. For those patterns to be formed, we need to violate all these previous structure, descending structure. So the market needs to violate above, which will increase the probabilities for more upside momentum. So what that means I will not be surprised to see those patterns working at some point and then the market trading even higher. So I can try to take advantage from one of those retracements as soon as the price prints one of those patterns, or even all of them. So it's not the first time and will not be the last one that the market will actually form all the sequences. The bearish bat pattern may offer a retracement, then we will see a false breakout above and the price finding some pressure right above the weekly fractal, forming kind of a false breakout, a new retracement, and then the price definitely rallying and searching for an impulsive swing, which may put the price trading above this or close these golden Fibonacci extensions. So it makes all sense if you start to plot those patterns. So, and there's a reason why we use the 88 and the 113% Fibonacci extension levels to plot these bearish bat and alt bat patterns. And then there's a quote that I use a lot of times: if the bat pattern fails, you just grab it. And that's the case. If the price fails to find resistance inside this range between the 88.6 and the 113% fib as a potential false breakout above these previous structure highs, I will not be surprised to see the price being pushed above. And yes, there's always something above or below one initial projection. So I have a bearish bat pattern. Of course, there's always something above. Even on a higher time frame, you can always find something that may be useful for you later if the price fails you on something, on some pattern printed below. So if those patterns fails, I already know where the price may trade after those patterns failed. So that being said, let's stay tuned on these possibilities. For now, the market is kind of heavy, and let's see if the price still respecting this daily fractal. Of course, a violation below these support levels may trigger more downside momentum. Euro versus the yen, I shared with you this price zone as a potential pressure price zone, symmetrical projection 126.38. Also the trend line resistance for this ascending channel. So basically we are trading this symmetry, and we should not be surprised if the price starts to retrace. So basically we have kind of an ABCD pattern, and we should not ignore the potential retracement back to some of those Fibonacci levels. The 38% Fibonacci will put the price trading again below that previous weekly and daily fractal resistance level. Let's see if that will happen. But I admit at least a retracement, even if limited. I admit a retracement for the pair, without ignoring, as I said yesterday, without ignoring those patterns printed above. Actually, that pattern printed above at 168 extension, the first level for the shark pattern, and the default projection for the inverted edge and shoulders, which is far away from the current high. So let's stay tuned on these. Euro versus yen. The pound versus the yen also shared this potential cup and handle in the violation of this structure, with the handle printed right above the 200 moving average. This is a 2 hours time frame chart, and we have default projections for that cup and handle suggesting a visit to the monthly fractal. Let's say if that is the case, we are seeing a nice reaction above this daily fractal at this point, nice recover. So let's see if that will be enough to approach both of those levels at 88.6 as a bearish bat pattern completion point, and then the 200% Fibonacci extension, and eventually a retest of the monthly fractal. But let's stay tuned at 141.62 because the market may find some pressure there. That's what we expect. Australian dollar versus the yen, also approaching the bearish shark pattern at 168 extension. Yesterday I projected that pattern at 77.63. We already know that pattern can also extend above, which will put the price trading the previous structure highs in monthly fractal resistance, but also converging with the major first level for the bearish shark pattern, the 168 extension, just a few points above the monthly fractal. So let's stay tuned. I will not ignore the potential retracement, or even if limited. I will not be surprised to see the price reacting from the golden Fibonacci level and eventually a retest of these previous fractal resistance levels. Then the New Zealand, also, as I said yesterday, the market has nailed the bearish crab pattern completion point projected at 74.04. Again, I will repeat myself, but that's what it is. I will not be surprised to see the price reacting from here. Of course, if the market decides to trade above the completion point, of course we need to ignore that pattern at some point will invalidate. But if the price decides to recover, and the objective is that to recover the monthly fractal, and then step by step recovering the daily fractal, and finally the retest of the weekly fractal resistance printed at 71.97. So that is the default target for the crab, the 38% Fibonacci retracement level. So as you can see, all the yens may be preparing downside momentum, but again, nothing is granted. The market can actually, just because we are trading those specific price zones, that's not granted. So we don't know actually if the market will react accordingly. One of the examples for the CAD versus the yen, I shared those price behaviors before. Outbat pattern, nice reaction from the 113, then the symmetrical, actually not a symmetrical but a butterfly pattern at 127 extension, right? Nice reaction from there, and then I started to project this as a bearish shark pattern at 81.02, this blue Fibonacci, golden Fibonacci extension, and this potential symmetry between these three waves, and the market has just failed just by a few points, both of those levels, the golden Fibonacci and the projection for a symmetrical ABCD pattern. So that being said, I will not be surprised to see the price starting to fall from here. Let's wait to see also for the Canadian dollar versus the yen, euro versus the pounds, above the daily fractal. I shared yesterday. I said yesterday I shared before this symmetry, and then later the technical level bottom. So we just need to wait for a violation of this previous structure fractal resistance. So the market has found some resistance right there, and the same way I projected, and when I started this video with the Dixie, I also shared with you that 2618 trade setup. So let's use the same methodology. Let's search for a golden Fibonacci retracement level. Let's put our prices here, 89.46. So basically that will complete the bullish 2618 trade setup. Okay, this will be the 2618 trade setup if the market decides to approach that level, and we can use that level to project a symmetrical ABCD pattern. Okay, that will put the price not only trading the default target for the technical double bottom, but also a few points above the golden Fibonacci retracement level, which is converging with that default projection for the technical double bottom. And well, that being said, we should see more bullish momentum for the pair if the price decides to find support. The idea is try to take advantage from this swift on the daily move, the 200 moving average, not the daily moving average, but the 2 hours time frame chart. But try to take advantage from this change, and eventually that will also change the momentum for the pair. So I will wait for a retracement to the golden fib, and then eventually a bounce, which may put the price trading even above the default projections for the technical double bottom, 91.69. Let's see if that is the case. But it's important to pay attention to this, to a potential support at this Fibonacci retracement level. We don't know if the price will find support there. We have resistance. A daily resistance may act as a support, so we don't know if the price will react without achieving those retracement levels. But if the price decides to touch that level, I will trigger a long position with targets above, with the first target, let's say with the first target at the previous structure highs, and then the second target at the symmetry, projected at the symmetry projection. Okay, euro versus Australian dollar. I need to drink something that I don't have here. 2 hours time frame. Let's keep this time frame for now. I projected this as a bearish crab pattern 164, 164.80. So let's see if the market will trade that price zone. For now, we're still threatening the recovery of this daily fractal resistance for euro versus Australian dollar, and then we have also the 224% Fibonacci extension, which may be also used as a shark pattern. So basically we have the convergence between this major shark pattern at 164 converging with this crab pattern territory. So let me correct this, because this is an extension for the shark, and the extension for the crab pattern is just a few points below. As you can see, it's just a few points, because I want to measure this internal crab pattern. I use this very last swing low, so I don't use this swing. So I want to measure from this low, from these highs, a daily fractal in this case, and I want to project a golden fib from all these swing projected above. The shark pattern will depend on this major swing, the fall, the recovery, and then a major fall, and then eventually the shark pattern at 161 or 224. So basically we have convergence between the major shark pattern and the internal crab pattern, also converging with the 50% fib. So let's stay tuned. As soon as the price approaches this level, I will search for that potential bearish momentum, or at least even if limited to the 50% fib, which is the default target for the pattern. That will offer you something like, let me see, that will offer something. It's a very short trade. It's 1%, 177. So that's what the market will offer you, or that's what the pattern may offer us. Euro versus the New Zealand, I shared also this as a potential pressure price zone. I draw that trend line as a potential ascending trend line support. The market has reacted fine from here. This is also the 224% fib, so we can expect at some point the 50% Fibonacci retracement to be reached. Now we are facing and rejecting, at least for now. We never know what will happen next, but it seems like it can trade higher. Let me go into a 1 hour time frame. I will not be surprised to see this price trading higher, but bullish shark pattern, 50% fib, 174.84. This is the default target for the pattern. So basically that will not be a surprise based on the default expectations for the shark pattern printed there. But as I was saying yesterday, I will not be surprised if the market decides to break below the daily fractal, and even if the price can actually trade the 50% fib and then fall into this major crab pattern territory. We never know what will happen. If the price decides to respect these highs and then fall, the pattern can be printed below. But for now, I'm still waiting for at least a default expectation for the crab pattern. But we are now facing the monthly fractal support level. Okay, we have a monthly fractal support. If the price decides to reject that level, we may see a reinforcement of this trend line support initially. So I will not ignore that potential the potential fall from this monthly fractal support, now acting as a resistance. And that being said, if the market decides to reject, to recover that support level, the market will obviously fall, and eventually more sideways moving process in between this range. We never know how long, how much time the price will remain inside this range, but it can happen. The market remains inside this range for a specific period of time, and then eventually more downside momentum. Pound versus the Australian dollar. I shared with you yesterday this potential heads and shoulders. I shared also the potential bounce from these zones, from the 161 or the 224% Fibonacci extension level. As we can see, nice reaction here. Let's go into a lower time frame. I believe it will be clear. So let's also hide these. Let me hide this pattern here. So I shared this as a bullish shark pattern territory. So the market has found some pressure at the golden Fibonacci extension level, the 168 extension, as you can see. So that forms the bullish shark pattern. By default, we wait for the 50% Fibonacci retracement to be reached, which will also complete a bearish sequence. So if I delete this wave from here, or this line, this will complete the bearish 5-0 sequence. Okay, we can use also the previous swing high, the one that prints a false breakout, and one of the criteria for the shark pattern. We can use also that one as a projection from the golden Fibonacci extension level, and usually I will see the 50% Fibonacci retracement being reached. So that will form the bearish 5-0 sequence, and that sequence will complete exactly at 81.23. So that's where the market will complete the bearish 5-0 sequence. Now, the bearish 5-0 sequence, I only have one target for that pattern, which is a retest of the previous structural lows, or at some point a retest of the previous structural highs if it is a bullish 5-0 sequence. But for a bearish 5-0 sequence, I will put my targets. Usually it's not a pattern that I trade with frequency, but well, it is what it is. Sometimes I push a trade and I target. If I need to push a trade for that one, I will target the previous structural lows. So that's not. It's a very limited short opportunity. I never know if the market. I know that I'm pushing a trade in the direction of a major trend. I can try to manage the trade in order to remain positioned in that direction. But usually, in terms of starting, my initial target will never be something below the previous lows. Actually, I use the most recent lows as kind of, okay, let's retest the lows. That's my point here. It can offer you more downside momentum in the direction of a trend, but at the same point it can also find some support and pressure above the previous structure highs. So if the price decides to fall, we can try to take advantage from that head and shoulders. So we can try to take advantage from this bearish 5-0 at 50% Fibonacci retracement in order to take advantage from this next swing. And of course, as I was saying yesterday, if the market decides to trade below the daily fractal and the weekly fractal, we may see the price trading even lower, and we have the major bullish pressure zone, the 168 extension, the one kind of an extended crab pattern, and if that happens, I will not be surprised to see a bounce from these lows. Let's wait and see. pound versus the New Zealand, I shared also this on a higher time frame, I believe, saying, okay, I will not be surprised to see the market recovering this golden Fibonacci at 190.66, and if that happens, I will see more upside momentum, eventually searching for that Fibonacci retracement level. So this is a Fibonacci retracement from these lows, just a few points below. So I will not be surprised to see that happening at some point, but we're still trading inside this descending channel. So basically nothing to say. We need to see a clear move above that structure. As I said yesterday, the market has found some pressure. We have the most recent at that time, the most recent support forged at 99.05 inside that channel, and in the middle or between those bullish shark patterns completion points. So the first one, 168 extension projected at 190.66, and then the 224% Fibonacci extension. That creates a range where we can see the price reacting accordingly to the default expectations for the shark pattern, which is nothing more than 50% Fibonacci retracement or 50% retracement from all this swing, and we wait for that to happen. Eventually it will search for the 200 moving average, also approaching from above. Potential false breakout below. Attention to this potential kind of a double bottom there. The Dixie, we have talked about that already, and finishing with the metals. Gold, as I was saying yesterday, it has found support right in the middle of those shark patterns. Also a similar situation, the one that I will show you before. And well, we are trading below the default target for the pattern, so we never know if the price will be reached or not, but we still expecting that to happen. 1864, which is the default target for that shark pattern, the 50% Fibonacci retracement level. Lower time frame, 2 hours time frame. Actually, you can see this on a 1 hour time frame if you want. The same for the silver, with a bullish bat pattern, alt bat pattern printed at 113% Fibonacci extension level. We are now approaching the golden Fib as a second target, and inside this kind of ascending structure. So let's not ignore more upside momentum for silver, without ignoring obviously this trend line as a potential trend line support, and the violation of that trend line support without achieving those. So this is in a very short period of time. If the market decides to fail the golden Fibonacci retracement level as a second target, we may see silver printing some retracements and printing some relief after this bullish momentum. But until the market stays still trading above this 200 moving average, and for now above this trend line support, or this kind of ascending trend line support, this is a lower time frame chart. Attention with that, because that can fail at any moment, and invalidating this trend line as an element of support. But until there, we rely on this trend line for now, waiting for more bullish momentum for silver. Now, crude oil, I was saying, okay, we still have this bearish pattern projected above. If the price decides to recover or to trade above that daily fractal, we must pay attention to that pressure Fibonacci extension level, 46.60. So if the price, it's still possible, we are trading in a correction or a consolidation process. It can fall directly to that 38% Fibonacci retracement level. If the market decides to trade below these most recent lows, I believe the market will be forced to search for that retracement without completing the pattern. But again, I rely on those advanced patterns. If the market decides to print a new high above the daily fractal 46.60, that should force that should target the 38% Fibonacci level again. So let's see if that will happen. Kind of a false breakout, a pressure zone, and then a violation of, or let's say the recovery of the daily fractal again. SPX I shared with you yesterday. I will not be surprised to see SPX remains inside this range between the weekly and the daily fractal resistance at this point, using the daily resistance as a support level. I will not be surprised to see more upside momentum for SPX, but well, only time will say. But again, nice trend line or nice structure, nice ascending structure right there. If the market decides to break below, it should force more downside momentum for SPX. The Dixie, actually the DAX, it's now approaching this trend line. Actually, it has found some pressure here, as we can see. Let me try to adjust this trend line here from a 30 minutes time frame chart. So it's something like a trend line, and the price finding, actually it was the previous fractal support level, okay, the previous fractal 4 hours fractal support trend lines, ascending trend line support line, ascending support trend line, well, it seems like the DAX has found some potential support again, and it's still trading inside these range, this ascending structure. Let's see how the market will react. I still short the DAX with stops positioned above the monthly fractal. So I still expect some again, even if limited, I'm waiting for that retracement, but no one assures me that will happen. It can fail, and it can violate this monthly fractal, which will force me to jump out from the trade, and that's what it is. If the market decides to trade above the monthly fractal, I don't need to remain attached to this idea that, okay, the market will retrace. It will. If it will retrace from here, I will take advantage from that. If it will fail, it will fail me once again. It will not be the first time the market will fail me, and it will not be the last one for sure. So I need to embrace that as a natural process. And that completes my presentation today. I can share with you the views for the Bitcoin, and for Ethereum. I shared these among our communities at Forex Analytix. I can share with you those charts. Let me try to push into a new browser window. So this is a weekly time frame for Bitcoin, and we still trading these. Actually, we are already trading above these highs, of course. But this is my weekly chart for Bitcoin. I believe I shared this with you before. So basically, this is the level that we are trading at. So we're still trading above. Actually, we are not above the previous structure highs at this point, but we were trading a few points above those highs. So the pattern that I show you, it's that very sharp pattern completion point. So we don't know if the price will react or how the price will react from here. We had a nice reaction that we can see on let's say on a 12 hours time frame, that bearish scrap pattern, offering some pressure and forcing the price to fall, but not enough to print the default expectations for the pattern. Ethereum has already, that one has already traded the default targets. Let me try to share with you also from the charts that I shared at Forex Analytics, and this is the one for Ethereum. So Ethereum has formed this bearish extended grab pattern at 644, and it has already traded the 38% fib, so the market has already retraced into those default targets. It has retested the weekly fractal, and after that the market has already traded above. So if you can see this, so this was a retracement to the 38-50% Fibonacci retracement level, and then new highs already above that completion point. So at this point we don't ignore more upside momentum for the crypto, Bitcoin and Ethereum, without ignoring that we're still trading inside a range for where bears should be preparing to engage the market. That's how I read those patterns. The bears are starting to prepare those shorts for Bitcoin, and eventually something may happen from above this high. So as soon as the market violates this structure, which has done already, so we have already a new daily fractal above the previous historical highs for Bitcoin. So I will not be surprised to see it at some point the market starts to retrace, and well, a minimum of a 38% Fibonacci will not be a surprise. That will put the price trading these previous structure highs. So basically we have kind of a convergence between a default target or a default Fibonacci retracement level as a potential pressure zone for support level. But again, if that fails, we may see Bitcoin trading even higher. But I truly expect more pressure for Bitcoin from these levels. At least the formation of kind of a cup and handle, which requires a retracement to form the handle. So well, and we can use also the 23% Fibonacci retracement level, actually converging with the previous and the most recent support. I will not be surprised to see the price ranging inside this price zone to form the handle, and at some point the price breaking above, confirming the cup and handle formation, which may put the price trading even higher, even above those default Fibonacci extension levels, above and above these major shark pattern projected at 161 extension. So that being said, I will not be surprised with more upside momentum if the price starts to squeeze. But at the same time, I'm expecting this as a potential previous monthly, actually the previous historical highs and previous resistance. I will expect some pressure at this price zone and the eventual formation of the handle. And well, let's see if the market will sink into those default 38% Fibonacci retracement level for Bitcoin. That being said, dear friends, stay well and see you the next time. Have a nice week.